Oh, do we have some things to talk about today, guys? Let's do it. As you all saw in the title, we got to go over the worst advice, well, I guess some of the worst advice that you can get in the stock market. There's a couple of points here. Let me pull up my notes. I think I have 3 or 4 points. And honestly, guys, it's kind of an impromptu video. I just woke up about 2.5 hours ago, 2 hours ago. It's Saturday. I'm not really doing much, so I figured, hey, let me make a quick video going over this, and I just jotted down a bunch of things. So let's get into it. If you guys find value, hit the like button, subscribe, drop me a comment, get your free money from Moo up to 5 free stocks, each of which could be valued up to $3,500. Use that link down below, deposit at least $100, and boom, you get your money. It's that simple, guys. And with that being said, let's dive into it. So the worst investing advice that you'll ever get. This is what we got to talk about. Starting off with number 1, and you guys have probably heard this advice as good advice. And I'm not saying it's completely trash, but we're going to get into that in a second. All right, let's talk about it. So number 1, buy what you know. How many times have you heard somebody say, oh, just invest in what you know? Oh, just invest in another one here that I jotted down. Buy what you use. Invest in what you know. Invest in what you use. So just because I use Yeti, you guys can see this. Can you see this, right? I use Yeti. Should I just go buy Yeti stock? Just because I have a Capital One card, which I'm not going to show you guys because then you'll get all my information, right? Just because I have a Capital One card, does that mean I should just go and invest in the company? Not necessarily, guys, because a lot of the time, I don't want to say a lot of the time, but sometimes you don't really know until you look into the financials, right? Sometimes the products that you use, sure, they could be fantastic products, but the company might be horrible. It might not be ran well. The financials might not be good. The company might be loaded with debt. I mean, what's a good example? GoPro. GoPro is a great example of this, right? GoPro makes fantastic cameras, guys. And if you're watching this video, I actually have a vlog from Costa Rica that I made about 3-4 years ago where I used a GoPro when we were going down, where were we going down? The huge, what's it called? A zip line, right? GoPro, I used, I think I have the Hero 4 or something like that, Hero 5. Great product. It does a great job. And if you just use that saying, oh, just invest in what you use, invest in what you know, right? Which in this case, GoPro, you would have lost a lot of money. I mean, if I pull up GoPro stock and I show you the max chart, 4 years ago when I was using that GoPro, it was, even before that, it was actually beaten down a lot even when I was using it 4 years ago, and I still have the GoPro. It's a great product. But before that, it was $100 a share in 2014, and then it hit $2 a share. So if you bought GoPro in 2014, the stock, you'd be down 98%. So in my opinion, yes, okay, fine. If you're a complete beginner, telling a beginner, invest in what you know, or just dig a little bit deeper into what you already understand, that might be good advice to get their feet wet, right? To kind of get them in the game of investing, because a lot of people that are beginners, they have no idea where to start. So they're going to start with what they know. I understand that. But if you get deeper into it, you get from a beginner, let's say, to intermediate, you start understanding more about financials and what makes a company good. It's not just about the product. Sure, the product needs to be good, but it's also the management team, the vision, the numbers, the debt levels, this, that, the third, the growth. So there's a lot to it. So that is number 1, the worst investment advice, because trust me, guys, people would get that advice, buy what you know, or invest in what you understand, whatever, and invest in what you use. They would take this advice and they're just going to go and buy blindly. They're just going to go and buy Yeti stock. They're going to go and buy, what hat is this I have here? I have a hat. Who makes this? 39.30, whatever. They're going to go buy, they're just going to go buy whatever they have in the house. And that is not a good strategy, in my opinion. You have to be able to go through financials, yada, yada, yada. You guys know what I'm saying, so I'm not going to harp on that too much. So that is number 1 and 2, I guess. Number 3, valuation doesn't matter. Stas, valuation doesn't matter, man. It's all about the future. It's all about the vision. And like I said before, vision matters, right? Growth matters. But what you pay also matters a lot. What you pay for your stock, what you pay for your investment is what matters a lot, guys. It's one of the most, if not the most important things, because like I always say, value is what is it? What's the word here? What's the saying rather? Price is what you pay, value is what you get. So if you're buying, I mean, sure, let's pull up Adobe. This is a stock that I've wanted to buy. If you're buying Adobe, yes, it's a great company. Yes, they have a great future vision, all that good stuff. They're growing. But if you bought it at $700 where it was just blatantly overvalued, you're not getting the best value. You're not getting the best bang for your buck, in other words, right? Yes, you're getting a great company, but you're overpaying for it. So you want to be able to buy companies at good prices. In my opinion, we're not going to dive too deep into, numbers, valuation, but I wouldn't buy a stock at an all-time high, near an all-time high. It's got to fall at least 10, 15, 20%, 30% before I start to get interested. And now we're getting that with Adobe. So I'm getting interested, guys. It's down 35%, but quite frankly, I would want it to come down even more. One stock that I did buy is Meta Platforms, Facebook. When this dumped 20, 30%, that's when I started getting interested, and now I have a cost basis of around $230 when the all-time high is almost $400. So you guys know what I'm saying here. Price is what you pay, value is what you get. Valuation does matter. If somebody tells you, oh, it's all about the story, Stas, it's all about the momentum, sure, you can momentum trade, you can do that, but come on. Valuation matters at the end of the day. If somebody tells you it doesn't matter, they just don't know what they're talking about. I'm just being, I'm just being 100% blunt. They just do not know what they're talking about. So that is one. What point is that? Number 3, and another one here, point number 4, which I don't know. You guys probably agree with this. People have said, Stas, index funds are for losers. Index funds are for boring sissies. Come on, buy some GameStop, AMC, buy some growth stocks. Why are you buying index funds? And the truth is, guys, I'm not the biggest index fund guy. I do have a lot of money in index funds, but I also have a lot of money in stocks. I'm kind of like this 50-50 guy. But there's some people out there that say, don't buy index funds at all. They're stupid. Just have a portfolio of stocks that you manage yourself, which I do that too. Like I said, I'm a 50-50 guy, but there's a big difference between a 50-50 guy, somebody that has, let's say, half their money in index funds, half their money in individual stocks, and these individual stocks are mostly blue chip, good companies, right? There's a big difference between that person and somebody that's all in individual stocks, which a lot of them could be speculative and so forth. So if somebody tells you index funds are for losers, just look at them and then show them this chart. Let me show you this chart, guys. Pull up SPY or pull up VOO, and then just go to the max chart and be like, oh, are index funds for losers? Oh, okay. VOO 10 years ago was $98, and it just hit $440, guys. So if you invest in an index fund, you're not a loser. You're doing well. If you invest in the S&P 500, what is it, 7, 8%, 10% over a long period of time, more like 7, 8%, depending on what inflation is. You are not a loser, guys. You are smart if you invest in index funds. And in my opinion, the way I've built my portfolio and what I try, well, I guess I'm not a financial advisor, but what I do talk about on the YouTube channel is have a foundation. And in my opinion, a foundation is have an index fund, whatever index fund you want. In my case, I have VOO, which tracks the S&P 500. Have some international exposure. I personally own VXUS, so I have some money in that for the long term to give me some diversity. And that's really it. I have some small cap ETFs. Well, I just have one. IJR is one that I own. I also own VOT. So I own these different ETFs that track index funds. And I build around it. I have a lot of money in Google individual stock. I have a lot of money in, Disney's one that I like. Apple's one that I like for the long term, of course. There's so many, guys. I have money in Alibaba. And, of course, I like to put money in blue chip. And I also like to put a little bit of money in speculative. I have money in DraftKings. I have money in, NEO. I have money in SPCE. And it's all about portfolio construction, right? You shouldn't be going all in. And if somebody, or in one stock, and if somebody tells you index funds suck, I mean, they're just dumb. In my opinion, having a good chunk in index funds, building around it, that's the way to go. So that's it, guys. We're about 10 minutes in on the dot. Perfect. If you all enjoyed this video, you know what to do. Hit the like button, drop me a comment. Make sure to subscribe as well. We're super close to 25,000, and that's a big milestone. Make sure to subscribe and check out my Patreon if you want all the, buys, sells, call outs, morning videos. There's so much I'm even forgetting, guys. So check it out down below if you want to join the Patreon, and make sure to get your free money for Moo up to 5 free stocks. I'm telling you guys, it's the best promo. Up to 5 free stocks, each of which could be valued up to $3,500. Just use that link down below, deposit at least $100, and boom, you get up to 5 stocks. And with that being said, I'll catch you guys in the next video. Thanks for watching as always. Peace out.